Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on the gold market. So as you could see, in general in recent few weeks, gold market starts to show a bit different performance and reaction on the same fundamental factors compared to the Forex market, where it's mostly everything is driving by the United States dollar dynamic. Here, although gold is also trading in relation to dollar and have the common trends compared to the Forex, to the currencies, but overall reaction still stands a bit different. In particular speaking, gold shows the slower and weaker reaction on the negative factors. It resists better to some external pressure. For instance, as we have got from the Fed a relatively hawkish statement, you could see that reaction in the gold market stands a bit different. So it shows the better upside bounce compared to the euro currency. And I starts to think that maybe investors start to understand what we talked about in the recent few months in our weekly reports, that rising rate too high, it could be just really big problems for the United States economy and for different markets, especially for the bond market. And investors aware of that gradually starts looking in the direction of the gold market to save their investments, save their money. That could maybe explain a bit different reaction on gold market compared to other assets. So currently on the gold, although we think that Fed background that they have put onto the markets actually should work and make long-lasting effect on the markets, and probably will make some pressure, but at this point you could see that mostly we could say that kind of the indecision performance. So that was reaction on the Fed statement. Currently you can see rather strong bounce. So market in general keeps the shape of the butterfly that we discussed, and probably where we currently do not have any reasons to deny it. Mostly everything today will depend on the payrolls report. What we've got on the payrolls weekly report could accelerate performance of the gold higher, just as the dynamic of the dollar might be to the downside, while strong report, or at least in a row with expectation, tells that Fed will have more time to keep the tightening policy, because no response from the employment comes, and that lets Fed to keep tightening, and that's potentially negative factor for the performance. But in general, downside actions and strong upside performance, it seems that indicates some kind of neutral sentiment on the market. So despite that Fed keep tightening, we do not see really bearish sentiment on the gold by far. So yes, some technical reaction exists on the bearish factors, but they're short term, and market returns back, which is, as I said, could become the signal that investors starts to rebalancing of the portfolio and start to think about the gold market. So on the follow time frame chart, we keep the minor butterfly shape as well, but take a look what the sharp reversal has happened. So here we see definite acceleration. We have stronger CD leg compared to AB1, and currently market shows big bounce. In fact, here we've got the Gartley steeple to buy pattern right there, because you could see that it's almost Gartley steeple to, because these lows are almost equal. So for the shape of the butterfly here, this significant pullback is of course not very good sign. But we will see what will happen on the payrolls, because mostly all swings now stands due to the external driving factors, not because some changing in the balance on the gold market, but it's just external factors, and that explains the volatility. So if today payrolls will be relatively strong, this market could start dropping back, and actually we could keep the target stands around the 16 even. So despite this ugly shape of the pattern, especially due to this small stressing upward action, we still keep this pattern on the table and see what will happen. On lower time frame, take a look with this ABCD pattern. Now I turn to the hourly chart first. Let's take a look with this ABCD pattern. Fast acceleration, market hits the OP and even moves slightly lower. Now it shows the sharp reversal. Yesterday we discussed this minor ABCD pattern, but we think that might be some, well, not as strong retracement as we're getting right now. So we said maybe to the confluence area that was around 1640. So currently you can see the market shows more strong action to the upside. Downside target stands around 16 even as well. So this ABCD pattern coincides with the butterfly target that we have on the 4-hour time frame chart, and precisely 16 even. And currently the major question is what will happen around these levels. You can see from the technical point of view, it's back to the 30-minute chart. You can see market has completed the necessary pullback. It's a bit extended, but still we could treat it as retracement, just because we have the ABCD. XOP has been completed right at the 618 level around 1650. From the technical point of view, if market still stands bearish, market should not break this level and keep going higher to the C point. Normal bearish market should turn down right there. So if you would like to take the short position, this level seems perfect. Not because you definitely will win and get the profit, but because of the very small risk. And I call this point as a culmination point. It's kind of the vital point, because this point provides you best risk reward ratio for a position. It doesn't guarantee you that you succeed, but it guarantees you that your loss, if you will get it, will be minimum. So for that purpose, you need to place stop relatively close and just see what will happen on a payrolls release. And the only risk factor right now is that on the payrolls it might be extreme volatility, and if you even will be wrong, you could be washed out just by occasional spikes here. So, but in general, this is some kind of the culmination point. For the bulls, you need to see that this is not a retracement anymore, and market turns to the upside continuation. In this case, you should get the breakout upper direction here as market is moving higher and taking out the C point. So in this case, we could suggest that well, this performance, market return back to the 1670, will be dangerous for the bullish context, is because in this case we definitely can't speak about the butterfly here anymore, and even on the daily chart, if market returns it back up here, well, it's also not really stands in favor of the butterfly. So we will see what will happen next. It will be bullish, and maybe even here we could start speaking about the hand and shoulders pattern or something of that sort if this action will happen. So that's what about the bulls. How to take the position with the bullish context, it is really the question, just because from one point of view you could try to jump in on the stop buy order when the breakout of this level and upward consolidation, but at the same time, if bullish context will start forming, we probably should get some more or less reasonable bounce to the downside, some pullback here, and maybe with the pullback it will be even better price for entry. That's why personally, as I be conservative, I prefer in the current circumstances to wait with the taking the long position. If even the bearish context will be broken, it makes sense to not be too hurry up with the position taking and probably get reasonable gradual retracement maybe on the next week.